Consumer credit control e.g. During deflation a recession, RBI can relax the down payment, EMI installment norms for durables like vehicles, TV, fridge etc. to boost consumption and demand. Priority sector lending, see below. 12.18 Priority sector lending, PSL. Figure 10, Governor Sahib. 1968. First time RBI used the word priority sector. Banks must give 40% of their loans to 3 priority sectors: 1. Agriculture, 2. Small industries, 3. Exporters by 1985. Over the years, more sectors were included in it. 2015, some reforms in PSL. 2019, RBI's UK Sinha Committee on MSME loan reforms suggested some more reforms in the PSL. 2020 September, RBI reformed PSL guidelines as following. Priority sector loans norms minimum quota after 2020 September reforms before after weaker sections, a 12% SC, ST, women, PH, minorities, manual scavengers, artisans, 10% black up pointing double triangle 12% asterisk. Batch, PCB7, Mrunal's economy pillar hashtag 1A2, money supply, and RBI's monetary policy page 84. Priority sector loans norms minimum quota after 2020 September reforms before after PM Jan Danya Jana overdrafts up to 10,000 rupees beneficiaries of Gov's National Rural Urban Livelihood Mission schemes, NILM, NULM, more in pill hashtag 6. HRD poverty removal schemes, agriculture, all farmers, small and big, 10% 8% agriculture, marginal farmer, owns up to 1 hectare land, small farmer, 1 up to 2 HT. 8% black up pointing double triangle 10% asterisk. Micro enterprises, Cardi Village Industries 7.5% above categories, weaker section, agriculture, micro enterprise, plus, other categories such as small and medium enterprises, affordable housing loans to beneficiaries under Pradhan Mantri Awas Yojana food processing companies, vermicompost, biofertilizer, seed production, exporters, student education loans, up to Rs.10 lakh, social infrastructure, schools, drinking water, sanitation facilities. Healthcare, COVID-related hospitals or labs etc., renewable energy projects, windmills, biomass generators, solar street light, microhydel plants etc., etc. 4.5% 2.5%. Total PSL for Indian scheduled commercial banks and foreign banks with 20 or more branches. 40% 40%. Asterisk above quota reforms to be implemented in phase-wise manner by 2023 to 24. Benefit? It will black up pointing double triangle loan availability for the weaker section and small farmers, thus helping in the United Nations Sustainable Development Goals related to poverty removal. Ref, HDT pillar hashtag 6. PSL quotas are minimum and not maximum. So, if bank wishes, it can even give even 60% of its loans to weaker sections, instead of just 12% minimum quota meant for weaker section. Banks loans given to non-banking financial company, NBFC, who are lending to above PSL categories equals such indirect loan to PSL sectors will also be counted for bank's quota. Bank plus NBFC's joint lending a co-lending a co-origination loans, what does it mean? Hashtag PhD not IMP. Note, PSL norms do not apply to NBFCs, PSL norms apply ONLY to bankers. 2.18.1 PSL reforms 2020 on RRB, SFB, a UCB. What is the difference? A meaning of SCB, a RRB, a SFB, a UCB, etc. Answer: Ref. HDT pillar hashtag 1B1 classification, type of bank and PSL reforms 2020 before after Indian scheduled commercial banks SCB and foreign banks in India with 20 or more branches 40% same 40%. Foreign bank in India with less than 20 branches 40% same 40% regional rural banks RRB 75% same 75% small finance banks SFB 75% same 75% urban cooperative banks, a UCB. Asterisk 40% black up pointing double triangle 75% rural cooperative banks. Not applicable, not applicable. These quotas implemented in a gradual, a phase-wise manner. Will become effective in 2023 to 24. Internal quotas may be different for these banks, e.g. RRBs. Weaker section equals 15%. But poor cost benefit in chasing all that information. Hashtag hourglass with flowing sand. 2.18.2 PSL reforms 2020. Startups, renewable energy and healthcare PSL loans other category before after startup company is a company. Age. Not older than 10 years and annual turnover. Not more than 100 crore Indian rupees and function. Innovation in goods services. Ref. HDT pillar hashtag 4B. Only eligible categories. Agro, a food processing related startup, MSME startup. Then what is MSME? Ref. HDT pillar hashtag 1D and hashtag 4B. All types of startups allowed in PSL quota. For loans up to 50 crore Indian rupees. Renewable energy. Only loans up to 15 CR eligible black up pointing double triangle 30 CR healthcare project hospital. 5 CR black up pointing double triangle 10 CR. 2.18.3 PSL reforms 2020. Weighted to poor districts. RBI will classify the districts based on previous PSL loans given by all banks. Type of district: if Axis Bank gives 100 Indian rupees PSL loan in this district, RBI will count Axis's quota fulfillment as __. Low credit penetration, e.g. Tawang, Dantewada, etc. 125 Indian rupees. High credit penetration, e.g. Ahmedabad, Pune, etc. 90 Indian rupees. Batch, PC Thus, RBI's PSL weighted system will passively discourage banks from giving more PSL loans to the developed districts, and it will encourage banks to give PSL loans to backward districts. This will help in more balanced regional development. Black question mark ornament MCQ. Priority sector lending by banks in India constitutes loans to Pre-2013, A. Agriculture B. Micro and small enterprises C. Weaker sections D. All of the above. 12.18.4 Priority sector lending certificates, PSLC, from 2016 onwards. Figure 11, Rancho assignment, extra walla. In this arrangement, the overachieving banks can sell their excess PSL in form of certificates to underachieving banks without transferring the loan assets or its risk. If an underachiever bank can't fulfill its PSL quota through PSL certificates purchase, then ultimately, underachiever bank will have to deposit PSL shortfall money to NABARD's Rural Infrastructure Development Fund, IDF, SIDBI, National Housing Bank, NHB, Mudra Limited, etc., as per the norms decided by RBI from time to time. Underachiever bank will earn interest from such deposited money, but it'll be usually linked with bank rate, and their money will be locked in a long-term project. Batch, PCB 12.19 Monetary Policy Tools, Error Reckon Table 5, if understood then well and good, else memorized by rote learning. Tools and strategy. Deflation, money supply, inject liquidity equals make loans cheaper, consumption inflation, do reverse. 2% CPI equals fight deflation, 6% CPI equals fight inflation, easy, cheap, dovish, expansionary policy. Tight, dear, hawkish, contractionary. Quantitative. Reserves, CRR, SLR, decrease, increase, key rates, repo, MSF, bank rate. Decrease, increase. Reverse repo, SDF. Decrease, so banks feel less motivation to park in RBI, and they become more proactive to give loans to people. Black up pointing double triangle demand deflation fought. Increase, so banks feel more motivation to park in RBI. Black down pointing double triangle loanable funds to people. Black up pointing double triangle loan interest rate. Black down pointing double triangle demand inflation fought market ops, OMO, RBI buys GSEC from market. OMO, RBI sells GSEC. Qualitative tools. Moral suasion, a direct action, nudge, force the banks to enforce dovish policy, enforce the hawkish policy. Margin requirement, a loan to value, LTV, increase e.g. Gold LTV, 60% 90% do reverse of left sell. Selective credit control, a priority sector lending, PSL. Loan flow to sectors that can generate employment, e.g. textile workers, buying more demand, consumption increase deflation fought. The loan flow to sectors where speculative investment is leading to demand-side inflation, e.g. real estate and housing. Loan flow to sectors where loans can supply, e.g. onion farmers. MCQs usually confined to how can CRR, SLR, repo, and OMO be used for inflation, deflation control. For rest of the tools you need not waste time thinking 500 Jat KE combinations and verbal kitchdi, raised hand. Black question mark ornament. Which of the following is not an instrument of selective credit control? Pre-1995, A. Regulation of consumer credit. B. Rationing of credit. Batch, PCB 7, C. Margin requirements. D. Cash reserve ratio. Black question mark ornament. An increase in the bank rate generally indicates that pre-2013, A. Market rate of interest is likely to fall. B. Central bank is no longer making loans to commercial banks. C. Central bank is following an easy money policy. D. Central bank is following a tight money policy. Black question mark ornament. If RBI decides to adopt an expansionist monetary policy, which of the following would it not do? Pre-2020, 1. Cut and optimize the statutory liquidity ratio. 2. Increase the marginal standing facility rate. 3. Cut the bank rate and repo rate. Answer codes, A, 1 and 2 only, B, 2 only, C, 1 and 3 only, D, 1, 2 and 3. Black question mark ornament. MCQ. Find correct statements. Prelims 2022, 1. If the inflation is too high, Reserve Bank of India, RBI, is likely to buy government securities. 2. If the rupee is rapidly depreciating, RBI is likely to sell dollars in the market. 3. If interest rates in the USA or European Union were to fall, that is likely to induce RBI to buy dollars. Codes, A, 1 and 2 only, B, 2 and 3 only, C, 1 and 3 only, D, 1, 2 and 3. 12.20 Monetary policy. Iron, present-day India. There are 3 strategies, or ways of making a monetary policy. 1. Exchange rate stability. Singapore and other export-oriented economies use this. They try to keep their local currency at certain rate against US dollar to boost exports. How? ANS pillar #3. 2. Multiple indicators. Central bank tries to focus on economic growth, employment, inflation control, and exchange rate stabilization. India's RBI followed this strategy up to 2016. 3. Inflation targeting. A price stability. Central bank only aims to keep inflation controlled, then other indicators, growth, employment, exchange rate, will automatically fall in line. Model successful in Western nations, RBI's Urjit Patel Committee Report, 2013-14, recommended it for India, adopted from 2016 October, by amending RBI Act Section 45. 2016 Batch, PCB 7, Mrunal's Economy Pillar #1 12.20.1 Monetary Policy Making under RBI Act since 2016. Figure 12. Table 6. Composition of the Scale Statutory Monetary Policy Committee, MPC. RBI side, 3 members, Gov. Side, 3 members, 1. RBI Governor, as the ex officio chairman. 2. DY, Governor responsible for monetary policy. Michael Patra, from 2020 January. Earlier Viral Acharya. 3. One person nominated by RBI Central Board, Mrunal Sadgar, Executive Director, RBI. 1. Dr. Shashank Obide from National Council for Applied Economic Research, NCAER, Delhi. 2. Dr. Shima Goyal from Indira Gandhi Institute of Development Research, Mumbai. 3. Dr. Joyant Avarma from IIMA, their tenure tied with their ex officio job tenure, e.g. Shaktikanta's Shakti powers, will be gone after his 3 years tenure as RBI Governor expires, unless he is reappointed. Note, Shaktikanta is reappointed till December 2024. Tenure, 4 years, no reappointment. 4. RBI Governor and DY. Government are selected by Financial Sector Regulatory Appointment Search Committee, FSRUSC, is headed by Cabinet Secretary, IAS. They are selected by Searchcom Selection Committee headed by Cabinet Secretary, IAS. Meeting quorum 4 persons, including Governor. Batch, PCB 7, Mrunal's legally required to hold minimum 4 meetings in a year. 4. In practice, they meet every 2 months to decide bi-monthly monetary policy updates. Although during Corona lockdown met more frequently. Repo rate equals policy rate equals benchmark interest rate, decided by majority vote. When they vote for the first time, all members, including the governor, will vote. If tie governor can vote again, the second time as casting vote. To ensure transparency, accountability. Gov can send message only in writing. Committee must publish its minutes of the meeting on the 14th day, and monetary policy report, at every 6 months. Inflation target decided by Union Government, after consulting with RBI Governor. Present target, keep Consumer Price Index, CPI, all India, within 2-6%. Alternate way of saying equals 4% plus, or minus spread of 2%, more about CPI inflation in pillar #4C. Target was valid for originally from 2016 to 2020, ending at the 31st of March, 2021. Now same target extended till the 31st of March, 2026. Target fail. If inflation not kept in this 2 to 6% zone for 3 consecutive quarters, equals 9 months, then committee must send report to Gov with reasons and remedies. Black question mark ornament MCQ. With reference to inflation in India, find correct statement. Prelims 2015. A. Controlling the inflation in India is the responsibility of the Government of India only. B. The Reserve Bank of India has no role in controlling the inflation. C. Decreased money circulation helps in controlling the inflation. D. Increased money circulation helps in controlling the inflation. Black question mark ornament MCQ. Find correct statements about Monetary Policy Committee. Prelims 2017. 1. It decides RBI's benchmark interest rates. 2. It is a 12-member body including the Governor of RBI and is reconstituted every year. 3. It functions under the chairmanship of the Union Finance Minister. Codes A. 1 only, B. 1 and 2 only, C. 3 only, D. 2 and 3 only. Black question mark ornament MCQ. Who is responsible for maintaining price stability by controlling inflation? A. Department of Consumer Affairs, B. Expenditure Management Commission. C. Financial Stability and Development Council, D. Reserve Bank of India. Stance equals what RBI will do in next meeting. Will they hike or increase black up pointing double triangle repo? Will they cut or decrease black down pointing double triangle repo? Will they hold or keep repo unchanged? Calibrated tightening. White heavy checkmark possible raised hand. No, they'll not cut. White heavy checkmark possible neutral. White heavy checkmark possible. White heavy checkmark possible. White heavy checkmark possible accommodative raised hand. No, they'll not hike. White heavy checkmark possible. White heavy checkmark possible. This provides guidance to the investors or borrowers, bankers about future action of RBI. However, RBI MPC is not legally bound to follow the stance. E.g. December 2018 Governor Urjit Patel led MPC announced calibrated tightening, yet in next meeting February 2019 Governor Shaktikanta led MPC decreased black down pointing double triangle repo rate. 2022 May-June, even though MPC said accommodative stance, still they kept increasing the repo rate. 12.22 RBI's monetary policies, before 2020 Corona. Policy decisions and regulatory announcements, we will study in appropriate pillars or sections. So don't lose sleep yet. 2018 era pattern inflation was higher rising black up pointing double triangle. So Governor Urjit Patel led MPC kept black up pointing double triangle repo in the range of 6 to 6.50%. Stance, calibrated tightening. 2019 era pattern inflation was falling below 2% black down pointing double triangle. So Governor Shaktikanta Das led MPC kept decreasing repo from 6 #% to 5 #%. Batch Stance, accommodative. CPI inflation rose to 7.4% in December 2019, which is outside the statutory limit of 2 to 6%, and this inflation rate was highest since 2014 July. So, ideally, RBI should have black up pointing double triangle repo rate to combat inflation, but 01 December 2019 policy had kept accommodative stance equals repo couldn't be increased. It could only be kept same or reduced. 02 Union Budget 2020 announced various measures to boost economic growth, so committee preferred to wait and watch how those measures impact inflation and growth before changing repo rate. RBI announces measures to promote economic growth. 1. LTRO, long-term repo operations, LTROs, of 1 year and 3 years. 2. CR exemption based on new loans given for 1. Automobiles, 2. Residential housing and 3. MSMEs. RBI announces measures to promote digital economy. 1. RBI to construct a digital payments index DPI to capture the growth of digital payments across India. Ref. 1A1. March to April given below as a separate subtopic for Corona. (12.23) RBI's monetary policies. Corona March to May 20 by default. RBI's MPC committee supposed to meet every 2 to 2 months. So, after February's meeting, they should hold next meetings in April. But in Corona crisis economic slowdown, they met more frequently in March to May. The gist of above March-April-May announcements are as following, and they are considered to be part of Atmanirbhar Bharat, which we'll learn in pillar #2D and #4C. 12.23.1 Atmanirbhar, gist of RBI's March to May 2020 announcements. Black down pointing double triangle CRR to 3% and black down pointing double triangle repo to 4%. Policy corridor changed to black down pointing double triangle reverse repo rate. #SBI telemarketing for loans. Targeted long-term repo operations, TLTRO. RBI gives loans to banks with condition that banks must invest it in X places to help corporates and NBFCs. Refer the full short note in earlier part of this handout. RBI's special or flexible liquidity window to help mutual fund companies. Atmanirbhar reforms by RBI in March to May 2020 we'll learn in pillar #. Raised hand loan, EMI, NPA relief for moratorium, 1B2, NPA. Special refinance facility for AIFI, all India financial institutions. 1B1, classification of banks AIFI, NABARD, SIDBI, EXIM, NHB, RBI defers Basel norms, Ind AS accounting norms, orders bank to pause or halt the dividend distribution. 1B2, Basel norms. RBI reforms ways and means advances, WMA, and consolidated sinking fund, CSF, 1C, SEBI share market, short-term debt instruments. RBI reforms attracting foreign investment, voluntary retention route, VR, fully accessible route, FAR. 3A, balance of payment, BOP, FDI, FPI. 12.23.2 RBI's monetary policies. 2020 August, earlier meeting in May 2020, repo unchanged at 4%, so automatically MSF at 4.25 and R at 3.35%. Stance, accommodative, no changes in repo because black up pointing double triangle food inflation due to Corona lockdown supply chain disruptions and 2 heavy rains. Repo changes can't help solving this. Still, if RBI black up pointing double triangle repo, then expensive loans post-Corona economic revival will be harmed. So, no changes in repo. Announced to conduct more rounds of op twist to help gov and companies to borrow at a cheaper rate. Gold loan LTV before 75% after 90%. Benefit? More quantity of loan can be taken by pledging same quantity of gold post-Corona economic revival. Priority sector lending, PSL. Reforms. 1. Black up pointing double triangle quota for weaker section, small marginal farmers. 2. Made all types of startups eligible for PSL loans. 3. Extra weightage to give PSL loans in poor districts. RBI committee under KV Komath submitted report on how to restructure loans impacted by the COVID-19 pandemic. RBI assured we'll implement that report. More in pillar #1B2, bad loans, RBI to loans to all India financial institutions, AIFIs, NABARD, SIDBI, EXIM, NHB, post-Corona economic revival. Ref. HDT pillar #1B1 classification of banks and NBFCs, less cash economy, a digital payment of fraud prevention. 1. Scheme of offline retail payments using cards and mobile devices. 2. Positive pay mechanism for checks. Ref. HDT pillar #1A1. We'll create a reserve bank innovation hub for research in cybersecurity, digital payment, etc. 12.23.3 RBI's monetary policies. 2020 October, repo unchanged at 4%, so automatically MSF at 4.25 and RR at 3.35%. Stance, accommodative. CPI inflation greater than 6.5% in July-August 2020. This is beyond the statutory 2 to 6% limit. So, ideally RBI should black up pointing double triangle the repo rate to combat inflation, but that will make the loans expensive and harm the post-corona economic revival. So the RBI kept the repo rate unchanged. Besides, the present inflation is caused by supply-side problems due to lockdown. Once the unlockdown progresses, supply black up pointing double triangle inflation black down pointing double triangle. So changes in the repo rate not required at present. Promoting digital payment. 1. RTGS made 24/7 ref. Pillar hashtag 1A1. 12.23.6 monetary policy. April 2021 update. No changes in rates and stance. Repo rate 4%, reverse repo rate 3.35%, MSF 4.25%, accommodative stance. Batch, PCB 7. Payment bank, before, they can't accept more than 1 Indian rupee lakh per depositor. After, balance limit increased to 2 Indian rupees lakh rupees per depositor. More in pillar hashtag 1B1, classification, centralized payment systems, CPS, Viz RTGS, and NEFT, direct membership allowed to non-bank payment system operators e.g. Phoneep, Amazon Pay etc. More in pillar hashtag 1A1. 12.23.7 monetary policy, June 2021 update, no changes in. Repo rate 4%, reverse repo rate 3.35%, MSF 4.25%, accommodative stance. On-tap liquidity window for contact-intensive sectors such as hotel, tourism, beauty parlors. 12.23.8 monetary policy, August 2021 update, no changes in key rates or stance. Repo unchanged at 4%, so automatically MSF at 4.25 and RR at 3.35%. Stance, accommodative 1 MPC member Professor Joint Farmer voted against the accommodative stance. He believes that repo needs to be increased to combat inflation. But the majority members voted in favor of the continuing accommodative stance with 4% repo. Announced to absorb over 4 rupees lakh crores via variable rate reverse repo, VRR, will continue to do GSAP, op-twist and open market operations, OMOs, depending on the situation, a requirement of the economy. 12.23.9 monetary policy, October 2021 update, no changes in key rates or stance. Repo unchanged at 4%, so automatically MSF at 4.25 and RR at 3.35%. Stance, accommodative. The 23rd of December, 10 monetary policy, December 2021 update, no changes. Repo unchanged at 4%, so MSF at 4.25 and RR at 3.35%. Stance, accommodative. The 23rd of December, 11 monetary policy, February 2022 update, no changes. Repo unchanged at 4%, so MSF at 4.25 and RR at 3.35%. Stance, accommodative. NPCI's e-rupee prepaid digital voucher. 1. Max limit black up pointing double triangle from 10,000 Indian rupees to 1 Indian rupee lakh. 2. Before. Single use after. Multi-use. Until balance exhausted. So, e-rupee vouchers can be used more than once, until the amount of the voucher is completely redeemed. More in pillar hashtag 1A1. The 23rd of December, 12 monetary policy, April 2022, SDF, no changes in key rates or stance. Repo unchanged at 4%, so automatically MSF at 4.25 and RR at 3.35%. Stance, accommodative introduced standing deposit facility, SDF. Batch, PC. Before 2022 April, policy corridor equals MSF, repo, reverse repo, after 2022 April, policy corridor equals MSF, repo plus 0.25%, repo, SDF, repo 0.25%, digital payment, proposal for cash withdrawal from ATMs in cardless manner i.e. using UPI-based mobile app. If physical card not inserted in ATM, machine black down pointing double triangle dangers of card skimming, card cloning, etc. scams. ATM. The 23rd of December, 13 monetary policy, May 2022 repo black up pointing double triangle RBI required to control inflation in 2 to 6% CPI, and RBI MPC usually meets every 2-2 months. But inflation crossed 7% because Russia-Ukraine crisis imported fertilizer and crude oil prices increased etc. So emergency MPC meeting held outcome, repo increased from 4% to 4.40% to combat inflation. Automatically, as per the formula, MSF equals 4.4% plus 0.25% equals 4.65% automatically, as per the formula. SDF equals 4.40% to 0.25% equals 4.15% reverse repo unchanged at 3.35% separately. RBI governor announced to increase CR from 4% to 4.50%. This will reduce the loanable funds to buy more than 85,000 Indian rupees crore. Black down pointing double triangle loanable funds, black up pointing double triangle loan interest rate, black down pointing double triangle demand, shopping black down pointing double triangle inflation. Note, MPC can't decide CR. Only RBI governor alone can decide CR. Stance, accommodative, but in future we will withdraw it. FAQ, isn't this repo increase a violation of the accommodative stance announced earlier? ANS, MPC has no legal obligation for accommodative stance. MPC has only one legal obligation: control inflation in 2 to 6% range. The 23rd of December, 14 monetary policy, June 2022 repo black up pointing double triangle repo black up pointing double triangle from 4.4% 4.9% to fight inflation. So, MSF, 5.15%, SDF, 4.65%. Reverse repo unchanged at 3.35% stance. Accommodative, but in future we will withdraw it. Equals meaning, in future, we'll take measures to black down pointing double triangle money supply at black up pointing double triangle loan rates to combat inflation. The 23rd of December, 15 monetary policy. Future updates. Stay tuned for Mrunal's free Win 23 series of lectures and handouts for upcoming bi-monthly monetary policy updates for UPSC prelims and mains 2023. Win 23 series to start from February 2023. Monetary Policy Committee decides only repo rate. Other decisions, such as CRISLR cut, PSL norms, banning magnetic chip cards, etc., are decided separately alone by RBI Governor. However, after the meeting, he'll make above type of announcements in the press conference. Black question mark ornament MCQ. RBI recent directives relating to storage of payment system data, popularly known as data diktat, command the payment system providers that, prelims 2019, 1. They shall ensure entire data relating to their payment systems are stored in a system only in India. 2. They shall ensure that the systems are owned and operated by public sector enterprises. 3. They shall submit the consolidated system audit report to the Controller and Auditor General of India by the end of the calendar year. Find correct statements, codes, A, 1 only, B, 1 and 2 only, C, 3 only, D, 1, 2 and 3 only, ANS. After April 2018's monetary policy, RBI Governor announced certain regulatory reforms. One of them was payment system data must be stored in India within next 6 months to ensure its safety against misuse of Russian Chinese hackers. So, for prelims 2019, this was D1 year current affairs. Now, we are targeting 2023, so need not put so much efforts behind 2018's current affairs. 12.24 banks lending rates percent. Figure 13, sir. RBI's 6-member statutory MPC decides policy rate equals repo rate to keep inflation within 2-6% CPI, all India, but who decides lending rates of individual banks, and how? Answer. 1969 Gov began nationalisation of private banks and administered interest rates on them, i.e. Gov would decide how much loan interest rate the banks should charge on borrowers. 1991 M. Narasimham suggested deregulation. Gov should not dictate, administer individual banks' interest rates. RBI should only give methodology to banks. 2003 RBI introduced benchmark prime lending rate BPLR system. 2010 RBI introduced formula base rate plus spread equals banks loan interest rate. Update frequency on individual banks' discretion. So, it did not help transmission of monetary policy much. Even if RBI reduced repo rate, the banks would not update their formula figures regularly. Batch, PCB7, Mrunal's Economy Pillar #1A 2016 RBI introduced formula, marginal cost of funds, based lending rate, MCLR, plus spread system. How exactly it worked? Outdated info. Not IMP, limitation. From January to October 2019, RBI blacked down pointing double triangle repo rate by 1.35%, but banks reduced their loan interest rates by merely 0.4%. Thus, even though RBI reduced its repo rate, banks are not quickly reducing their loan interest rates. So MCLR system was ineffective. 12.25 banks loan interest rate. External benchmark, MCLR's #epic fail ultimately forced RBI to order external benchmark formula from the 1st of October, 2019. External benchmark plus spread, profit, plus risk premium equals bank's loan interest rate. 12.25.1 External benchmark, formula components, individual bank free to pick any one external benchmark such as 1. RBI repo rate or 2. 91-day T-bill yield or 3. 182-day T-bill yield or 4. Any other benchmarks by an organization named Financial Benchmarks India Limited. Banks must feed the latest data of external benchmark in above formula at least once every 3 months. 3. So both fresh and old existing borrowers will benefit, e.g. if repo rate decreased. 12.25.2 External benchmark system, which borrowers eligible. 1. Personal loans, taken for any sudden emergency expenditure. 2. Retails loans, home, vehicle, electronics, etc. 3. Loans to micro and small enterprises. 4. Loans medium enterprises. This fourth category is to be added from the 1st of April, 2020. 5. It is applicable to older previous loans in above categories if borrower fills the application form. External benchmark benefits. Equals better transmission of monetary policy, transparency, and accountability to borrowers. 12.25.3 External benchmark system, FAQ. Can existing old borrowers benefit? Answer is within the handout if you read it carefully. FAQ, can bank change external benchmark indicator after giving loan? ANS, watch video. FAQ, can bank change the spread, profit, in the formula after giving loan to a client? ANS. Not allowed to change. And this is not IMP for exam. FAQ, can bank change the risk premium in the formula after giving loan to a client? ANS. Yes, e.g. Gov employee thrown out of job after getting loan, then banker may black up pointing double triangle the risk premium on him because now he's jobless, so the risk probability of his loan default black up pointing double triangle. And this is not IMP for exam. 12.25.4 Banks lending rates percent fixed vs floating interest loans, teaser loans, NPA, etc. Refer to Pillar 1B2, Burning Issues NPA. 12.25.5 Corona 2020 Impact on deposits interest rate and loans interest rate, as press 21 deposit interest. Black down pointing double triangle, black down pointing double triangle. The saving deposit rates equals 3.25 to 3.5% in 2019, but 2.7 to 3.0% in 2021. Reason: RBI has reduced repo rate and also provided long-term loans in TLTRO, so banks are not so greatly desperate to acquire the raw material, i.e. money, from deposits. Percent. 2. Black down pointing double triangle loan demand so cannot offer high level of profit to depositors. Percent loan interest black down pointing double triangle due to black down pointing double triangle in repo rate in the external benchmark system. 12.26 Limitations of monetary policy in India. Figure 14. Even though monetary policy updated is every 2 months, its efficacy in controlling inflation and boosting growth is restricted by following factors. Smiley face. 1. Western countries' households' consumerist lifestyle don't save large amount of money in banks, so their banks borrow more quantum of money from US Federal Reserve and European Central Bank respectively. Whereas in India, repo is not major source of funds for Indian banks due to higher level of savings and deposits. Batch, PCB. 2. Before the external benchmark system, Indian banks did not immediately pass on the RBI rate cuts to customers, citing NPA, a bad loans, a profitability problem. According to RBI's own research, it took minimum 6 to 12 months for repo rate cut to benefit end customers, and it took about 24 months for repo rate changes to impact inflation. 3. Poor management in public sector banks, PSB, scams in the private sector banks, large level of non-performing assets, NPA, also stymie the impact of monetary policy. More in Pill 1b24, supply-side issues, El Nino or poor monsoon hurting crop production, food inflation, wars and geopolitical issues, black up pointing double triangle, global crude oil and raw material prices, protectionism by China US. Denting our exports. RBI can't control them. Plus equals. Pill 3 and 4a5, while cheap loans can boost consumption, investment and growth, but because of poor monsoon fear and oil price fear, RBI, during Raghuram Rajan and Urjit Patel's governorships, was usually apprehensive of inflation and more inclined to keep repo rate high. Then RBI was get criticized for not facilitating cheap loans and economic growth because of its hawkish policy. 6. Government side issues, fiscal deficit, subsidy leakage, populist loan waivers etc. Pill hashtag 2D FRBM Act 7, structural issues in economy, lack of ease of doing biz, electricity road infrastructure equals. Production of supply affecting inflation trends. More in Pill 4b and 5.8, presence of informal moneylenders in rural areas who circulate black money at exorbitant interest rates. Poor penetration of banking sector, lack of financial inclusion, cash-intensive rural economy etc. More in Pill 1d. 12.26.1 Monetary policy limitations. Lazy banking in Corona crisis 2020 Corona equals RBI pursued easy dovish expansionary monetary policy wherein it black down pointing double triangle CR, black down pointing double triangle repo, open new windows of tools such as TLTRO, GSAP etc. Yet, year 2020 to 21 loans to households or businessmen. Money invested in GSEC Indian banks tilde 5.8 trillion rupees tilde 7.2 trillion rupees thus, majority of the bank's money invested in GSEC rather than in loans to households or businessmen. This is an evidence of lazy banking. Reasons? Batch, PCB7, Mrunal's economy pillar hashtag 1A2, money supply, and RBI's monetary policy page 101. A. Banks are reluctant to give loans to people fearing black up pointing double triangle NPA, the bad loans, more in pill hashtag 1B2, B. People themselves not coming to take loans due to uncertainty in their future income and business. Equals. 12.26.2 Monetary policy limitations, cheap loans causing inflation. MPC member Professor Joint Pharma believes that COVID-19 is becoming like tuberculosis, which kills a very large number of people every year without inflicting major damage to the economy. And there is a possibility that COVID-19 will haunt us for the next 3 to 5 years. But we can't continue to keep cheap loans, 4% repo, for so long, else it'll cause asset price inflation. E.g. suppose rich men buying 3 to 3 bungalows using cheap loans for investment. Demand for bungalows increased, home prices increased equals inflation in asset prices. Similar problem in share market ref hashtag 1C. This could also result in stagflation equals persistent high inflation, high unemployment and low growth. 12.26.3 US Fed tapering and impact on India 2021, USA inflation at 6.2%, highest in 30 years. It may have following negative impact for India. 1. US Feds will black up arrow repo to combat American inflation. US Feds will reduce bond purchase program, equals Fed tapering, black up pointing double triangle loan interest rates in India foreign portfolio investors, FPI, who invest up to 10% in a single Indian company's shares. Those FPIs may pull out money from India to give it as loans in American market Indian share market black down arrow. Indian investors also lose money. Indian investors flock towards gold, real estate, and cryptocurrency for better returns. New set of problems related to tax evasion. 2. When FPI pull out money from Indian share market, rupee weakens, black up arrow imports become more expensive. REF. Pillar number 3, black up arrow inflation. RBI forced to black up arrow repo to combat inflation equals expensive loans will harm India's post-corona economic revival. Batch. 3. Imported goods or services from USA to become expensive for India equals imported inflation. 30. 12.26.4 Monetary policy limitations. Black swan events. A black swan event means an unprecedented, unexpected extreme risk event, e.g., 2007's USA subprime crisis, 2020's Corona. RBI report says next black swan event FPI may pull out $100 billion from Indian market. It'll create problems similar to previous section. Black swan theory was put forward by author Nassim Nicholas Taleb in book The Black Swan. FAQ, can we say Fed tapering is a black swan event? ANS, no. Because it was not unexpected event. It was expected by economists. 12.26.5 Writing hand monetary policy, conclusion. Monetary policy plays an important role in price stability, economic growth, job creation, and social justice in any economy. But its efficacy is low for Indian economy because of the aforementioned issues. However, both RBI and Government of India have been making attempts to address it through various reforms for fixing the bad loan (NPA) problem in banking sector, developing the infrastructure, and promoting the ease of doing business, financial inclusion and less cash. Batch. Economy. In the upcoming time, these reforms will help improving the impact of monetary policy in India's economic growth and human development. 12.271 Raised hand mock questions for UPSC Mains GSM 3, 250 words. 1. Monetary policy is both a catalyst and an impediment to India's growth story. Examine critically. 2. Monetary policy is a useful medicine, but not panacea for economic growth. Comment in context of India. 3. Discuss the significance of monetary policy in India's economic growth and human development. 4. Give an account of the steps undertaken by RBI to revive the Indian economy from corona pandemic. 5. Enumerate the steps taken by the RBI under the Atmanirbhar Bharat initiative. 6. Write short notes on 1. Operation Twist 2. GSAP, Next HDT, Pillar 1B1 classification.